What's up, guys? We are in a trade right now looking for $300. Looking for 60, 64, 50, basically going back through this wick. We want to see us get to the high, which is up here. At least get to this area, my old supply zone, my old demand zone, which we violated. But we're going to lock in when we get to $300. We're going to lock in at 60, 63. I'd like to see us go for about $500. Bring up manual close. We're bringing up manual close, but we're also putting it right here under modify. Why? So that I can have access to quick close if I need to, and modify if I can. We're at $200. We're looking for 3. That's a $3 move. If that's all we're getting this morning, that's all we're getting this morning. I'd like to see us break out for 500. There's 250. I need to go a little bit higher so I can lock in. Let's go to at least 300. We're gonna lock in the 250. We're going for that right there. So we'll take the 275. I just wanted to lock in some profit. I missed half the candle already. I just want to lock in some profit and get a good trade in. Yes, it went to $300 like a second later, but that was a good trade. 275. We also got $100 on the other side of things right here. So we're gonna watch and see where it goes, and we'll take our next trade at 9:30. So that's it for right now. I can close this. I don't need this open anymore. The crazy part is this: all I was risking, because it's an 8:30 move, was $75. So if things had shot down, I would have lost $75 to like maybe $150 because it's going to take some time for it to react. And then like had it went crazy to the upside, then I would have got $2,000. But we got 275 of the 300 that we're seeing right now, so that's pretty good. All right, guys, so we made our money or whatever. We're gonna have a quick talk about it. Let's discuss what's going on right now. So this will be part 3 of market structure and how supply and demand works. You guys have noticed that we ran through my demand zone. This is my demand zone 0 right here. Let me go ahead and put that here. Demand 0. The next level up right here is demand main. Oh, not demand. So this is my main demand zone. This is the area that we're working in majority of the time, okay? There are 3 levels to what's going on right now in market structure. I'm gonna shrink this down for you. I'm on the 4-hour time frame. I took my trades off the 4-hour time frame, so you can scalp off the 4-hour time frame. You just really need to know what level to enter on, right? We made $450 so far, 100 here, 350 right here, and we're taking single contract trades, guys. Single contract trades. We had 2 contracts earlier on, and then single contracts after that. And then you see I went to the downside right here, which is 60, 69.75, which is literally right here. And then it wicked up about $25, and then it came down to about $125 right there. But that's beside the point. So what's happening in market structure? Let's go to my MES, because actually I need to stay on this screen for a second. So you see these wicks here. What are these? What are these sharp movements? These are what are known as, another one right there as well, liquidity grabs. And what is liquidity? First off, liquidity is that money that is available in the marketplace to begin with. That is liquidity, right? So a liquidity grab is when a person that has a large amount of contracts, you know, someone who has millions of dollars, goes in and they sharply sell off or buy a large amount of contracts, which triggers a strong move in one direction and then an immediate reversal. So it looks like a spike in price action. So in this situation here, the liquidity was this. There are people that were bearish. When a candle is red, it's a bearish candle, or when a candle is going down, I should say. It doesn't matter what color it is. When a candle is going down, it is considered a bearish candle, right? This candle was going down and down and down. Then we get to this point right here, this strong level of resistance. This is where someone had, let's say, 100,000 orders. ready to fill. That's a lot of money, right? As soon as they fill that, we shoot back up to right here. And then we go up and down for a little bit, but we immediately shoot back up that $10. And that is what liquidity is. Liquidity is the price action that's happening and them taking your orders. Your orders are your liquidity in the market itself. If you have bearish orders, you have bearish liquidity. They had a bullish order, a massive bullish order, which wiped out all your bearish liquidity in a snap. Right? So that's what a liquidity grab is. And that's the third part of market structure. But the reality of market structure is in the bodies of the candles and where the bodies of the candles close. Yes, you get these massive pullbacks in the wick, but the level was right there at the time. We fell below it. We couldn't go back up any further. And then we went ahead and we pushed down below the wick. So the wicks that are left behind will eventually be filled with the body of a candle. So as we shift down in trend to the next to the next lower level, we're going to have a full body of a candle sitting right next to this. And then we'll probably go up to the demand zone. That used to be the demand zone here. This will be a supply zone then. And then it'll start pushing us lower. But for the time being, we're maintaining our zone. Our zone is not changed. Our range is not changed. Our range actually starts right here at this blue line, not up here at these supply zones. It starts right here at this blue line. And then it comes down here. So this is the first 50% right there. That's the second 50%. You see, we went up to 50% and we rejected and we went down lower. Once we get up past 50%, we'll be able to go back up to the high. And as you guys know, my stance on this is that SPY really wants to get to 610. We went up from 602 last night to 605. We're already up $3. If the CPI data or the national interest data can carry us through 9 o'clock and 10 o'clock to 609, we should be able to go ahead and go up to 610. Why I'm so excited about this is because when that happens, there's going to be, well, okay, I won't say with 100% certainty because we could always carry to 15 or 20, but there should be a natural strong rejection around $610 to $610.20. But it should be a nice strong rejection, and that's what I'm looking to take advantage of. Please, by all means, do not 100% rely on me saying that when we get to 610 we're going to reject. I cannot 100% guarantee you of that, but what I can explain is how liquidity happens. So we pushed up to $609.90, and everybody holding for 610 was like, dope, we're about to reach 610. Liquidity grab. We dropped from 609 all the way to 608. That $1 is $10 on ES. That is enough to wipe out majority of bullish traders, but it goes beyond that because we actually go on the next candle all the way down into this area at 130 right here, right? So now that we're down $2, it's like, whoa, everybody who was bearish and holding for $610, unless they have a long-term contract, is wiped out. All the single day intraday traders by that time are wiped out, and then from that point on it's just falling the next day and the next day and the next day. And now we're kind of rebounding. Now that we've hit that point that we were trying to reach of 602, we're kind of rebounding to the upside, and we want to see how far we're going to carry up today. But as always, look at 605.23. I'm going to give you guys a very cool tip. When we reach these 20s, like 20 cents and 40 cents and 60 cents, we often have a little bit of a rejection that I take advantage of. You'll see it like spike to the downside and stuff like that. And that's the trade that I just took. Let's go over to ES over here, right? That was the trade that I took. You see it went up to right there. It hit that point. It rejected to right here. I took that trade. And so now as it carries up beyond that, that's why that's a scalp. That is a quick 1 minute trade or whatever you get out, and then it's going to push back up. But on those 20 cent areas, we first get a rejection, and then we break it and go to 30 cent, and then we'll go up to 40. We might get a little bit of a pullback to 30, but all of that is like a $1, $2 move for ES. And I take advantage of all of those. Once we get past 50 cent, things tend to go very aggressively towards the upside. But we're going to cut the video here. I don't want to overcharge you guys too much with too many different terminology. Too much. I don't want to give you guys too much terminology. I'll just go ahead and break down really quickly what liquidity is. Liquidity is the money that's available in the market. A liquidity grab happens when you have a lot of orders going in one direction, and somebody with a ton of orders or a lot of money decides to sharply push it back the other direction by selling off or buying a bunch of orders, right? So you're pushing down, everybody's bullish, we're going lower, oh my gosh. No, that guy's got 100,000 orders just sitting right here. That's one person with $100,000 100,000 orders sitting right there, millions of dollars. And then boom, it spikes. They get all of your money, and then you're just left there holding the bag, which is why you need to understand supply and demand and not just support and resistance. I know they are one and the same, but supply and demand is market structure. This to this is market structure. This to this is the lower half of the structure. This to this is the upper half of the structure. This is no man's land. We are in the lower half of the structure right now. We broke through the lower half of the structure, so we had what is called a breakout. We broke down to a support level, a very strong support level, which could be a demand zone, but it's not quite a demand zone. The demand zone starts right here and is right here as well. So there's two levels to the demand zone, and the supply zone is right there, right? But also in this area for this particular range that we're in. But that's it for today, guys. I made my trade. I got my money. I'm going to head on out. I will look at 9:30 for another trade. If I can't find anything good at 9:30, I'll just move on with my day. You guys have a great day. Happy hunting out there. As always, take the easy money. If you found this video helpful, please feel free to let me know in the comment section. If you have questions about this video, feel free to let me know in the comment section as well. And I'll catch you in the next one. This has been Sebastian. This has been another Full Transparency trading session. And I'm out.
Ha 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 ha.